My name is Carlette DeVoe, and I'm the chair of the Parkland Chamber. This is a very difficult time for all of us with COVID-19 and what is going on in our community, in the world. The Parkland Chamber Board of Directors have worked very, very diligently to provide information to the community as well as to its members to ensure that they are informed about what's going on. Like Cindy said, we have a breakfast next month where we will have Commissioner Udine at that breakfast, as well as Jared Moskowitz. We've had Congressman Deutsch last month, and we have had someone from the SBA at least on 2 separate occasions to provide information. So with that being said, what we are trying to do is we are trying to provide relevant information to our members, to our communities, so that your businesses can be sustained throughout this very, very difficult time. And one of the relevant things that we want to do to share information is this panel. This panel of experts are here to ensure that you're able to navigate through the difficult time trying to figure out how to get through the paperwork. So this panel, the PPP Loan Forgiveness for Existing Loans panel, is a phenomenal group of experts that are here to share information and help you navigate. And after this meeting, if you need more information, please take their contact information because they are here to help you. So with that being said, I'd like to introduce, as Cindy said, our 2 moderators who will take it from here, Douglas Eaton and Simeon Breyer. Take it away, guys.
Thank you, Corlette. Good morning, everybody. Let's jump right in. We'll start with just a couple of introductions. Simeon, why don't you go ahead and introduce your associate and introduce yourself, and then we'll get to the other panelists.
Sure, Doug. Good morning, everyone. My name is Simeon Breyer. I am one of the board members for the Parkland Chamber, and so glad you could join us this morning. I am a practicing attorney in Cozen O'Connor, which is a national law firm of about 800 lawyers across the U.S. Jordan Chisholm, who's one of my colleagues, is an attorney in our corporate department. Jordan has been working with a number of clients on corporate restructuring, on PPP application issues and PPP related issues. And aside from being a wonderful guy, Jordan is going to tell you what he can impart in terms of some of the guidance from a legal perspective on the PPP loan forgiveness process. So with that, I'll turn it back over to you, Doug.
Okay, thank you, Simeon. Morning, everybody. Douglas Eaton. I'm also on the board of the Parkland Chamber. I'm a partner in fiduciary planning, DBA Eaton Financial Group. We're a registered investment advisor. I'm the chief investment officer. On the call today as well on the panel is first Tom Shorn, CPA. Tom started his career with Deloitte & Touche, which I think used to be called Touche Ross in the mid-'80s. He's got a master's in tax, master's in financial planning, as well as a CPA. He too is a partner in fiduciary planning as the chief compliance officer. He also does do his tax work as well as planning for his individual clients. I'm very proud to call Tom a friend and a partner. And I can tell you that Tom, since the beginning of all of this, has probably spent upwards of 120, 150 hours studying this subject matter with the SBA and the Treasury. And he has a good perspective and a good handle on the logistics and the overall kind of spirit of the rule. Elliot Kessler has also been a CPA for a very long time, since I believe the mid-'80s or late '80s. Prior to forming his firm, Topping & Kessler, he was a senior tax manager in the Miami-Dade office of Deloitte & Touche, where he worked for 7 years. He has extensive experience with tax issues, general limited partnerships, LLCs, S corporations, and real estate. Elliot and I have been friends since 1981, 1982. I trust him not only with my own taxes, but with many of my most important clients. So, since this all started, Tom and Elliot and some other CPAs we know have running some panels for small business owners and other CPAs, and we've been studying this. And I say we, but really Tom and Elliot have been studying this extensively and kind of keeping tabs on the twists and turns. So in terms of introducing the topic and our why, so to speak, a good way to look at this is that, the shortest words and the oldest words are yes and no. And those words also require the most thought. So for instance, yes, should I take and keep the loan? No. Should I not take the loan? Will this be acceptable rationale for use of the money? Will this loan be forgiven? So on and so forth. And since this whole thing was envisioned and started in late March, what you find is that there's 5 answers for every 3 questions about it. And every question, begets 5 more answers, and there's no playbook for it. So today our goal is very simple. Now that you probably have your money and you've been using it for a while, I believe the first day was April 3rd, and the 8 weeks is coming up. Our goal is simple. We want to help get this off your balance sheet. Right now it's a liability, and we want to turn this into a permanent, revenue item, so to speak. And this really should be a grant. That was the spirit of this. This wasn't a ruse by the government to try to collect 1% on a loan repayment. So since there are many twists and turns and one question begets another, I want to make sure that we leave plenty of time at the end for Q&A, and we plan to do so. We're scheduled for an hour today. If we need more time, we'll stay on as long as we're able to stay on. And if you want some more feedback offline, we're all happy to help get that to you. So with that said, I want to dish this out to each person on the panel and start off talking about what does the forgiveness process look like. For instance, what's the soonest I can apply for forgiveness? Deadlines. What may cause rejection, and if so, will there be a review process? To whom are the applications addressed? Is it the SBA? Is it your lender? And any other comments? So I'll start in, kind of how I see you. Tom, why don't you get started with just some brief comments on this, and then we'll keep going. I believe Tom, you got to take Tom off mute. Give me a second.
There you go.
Okay.
So, thank you, Doug. So in my world, right, forgiveness should be pretty easy. Unfortunately, as we see new guidance come out, right, and the latest guidance came out on Friday, it's a little bit more and more difficult, some changes, and the best way I can put this, I heard it from somebody else, it's like, airplane while we're in flight, right? And that's what's happening here. And for those, and I don't know if anyone on this call received an email, I know Doug did, for me on Monday. It was easy to tell how upset I was on Monday after reviewing the guidance that came out on Friday and what it means to some of my clients. And so, look, I think the application process, looking at from a 10,000-foot view, is easy. Come down to, our level right now, I think it's going to be much more difficult. It's complicated. And as Elliot put it a little bit before we got online here, it's harder than a tax return, right? So my advice here, Doug, to this question for everyone online with us is to stay in touch with CPAs, and if they're working with attorneys for forgiveness, stay in touch with them. Really importantly, we got to stay in touch with the bank, because you said, when do I, right? And so I have my first client 8 weeks or over next week. And, my advice to them so far is we're not applying until there's a motion going on. There's many applications in. I don't want them to be the first into the bank and the bank just, scour over this thing for days, right? And so, my thoughts are, it's easy, but it's tough, right? And it'll become easier if you stay with Elliot, your CPA, or if in fact, and I don't know if the attorney's here, and you guys can answer to this, if you're helping with forgiveness for your clients as well.
So Simeon, why don't you start off, Simeon, and give some perspective. We'll let Jordan jump in.
Sure. So, like Tom and Doug shared, I mean, this is guidance that's coming out on the fly, and we're certainly getting ourselves educated from a legal perspective. Our corporate guys have been, overloaded, as I'm sure many of the accountants and financial practitioners on the Zoom have been with questions, and much of it is a learning process to see what the guidance provides and what will happen. I can tell you, a banking perspective, we asked several banks to participate, and they are so concerned with the uncertainties associated with the PPP program and the forgiveness that they're restricted from giving public presentations because they don't want to misspeak. But we've been working with a number of clients. I'll turn it over to Jordan so he can give you his perspective and some information on what he sees and some of the guidance that we've been providing to our folks.
Thank you, Simeon. It's mainly just to echo what both you and Tom have said. As the guidance comes out, we do our best to try to study it and anticipate, how, some of the formulas that are used in the guidance and how, some of the ways that our clients have proceeded since the original application came out. Well, how is that going to affect the applications for forgiveness? Like Tom said, from a 30,000-foot view, I view it as just a couple of pieces, right? There is, well, what's being forgiven, what's going to adjust the amount that's being forgiven, and when is the appropriate, period during which you're going to, the SBA and the lender is going to be looking at the application that the amount that you're trying to be forgiven, and what's the actual application process. That sounds great from a 30,000-foot view, but if you get down into, well, what if you actually had to make a force reduction during that period, or what if you had to reduce salaries during that period? Well, that does affect the amount that could be forgiven. There's a pretty notable cap on how much of the PPP loans can be used for non-payroll costs. The actual definition of non-payroll costs seems to be straightforward, but if you can only go up to 25% for that amount, right? And so I think a lot of our clients are getting caught up on, okay, I want to make sure that I spent as much of the money on maintaining my workforce as possible, and I want to make sure that when it comes to actually submitting the application for forgiveness, I'm in the clear. But the honest truth is that there's so many twists and turns. If you had a force reduction, if you had salary reductions, if your payroll period is not quite the exact 8 weeks, they've created this alternative covered period structure that you read it and you're like, what are we talking about here? But again, I think the intent is to make it so that business owners don't have to totally overhaul their payroll bureaucracy in order to be eligible for this loan. But the outcome is that it creates a lot of questions in the application for forgiveness for the client. So what we've been telling our clients is we're going to review the guidance as best as we can. We've done everything we can to make our clients attractive in order to get the loans in the first place. And as Simeon said, one of our clients had to kind of do a restructuring. Another one of our clients had to, just to restructure his employees. All of that was just to get the actual applications accepted. And now we're at the point that we're getting into the nitty-gritty with, well, what does it actually mean for forgiveness? So our hope is that as more guidance comes out, that question will become clearer. But I share your kind of concerns about, well, this is not going to be as easy of a path as we had hoped.
Yeah, and one of the things that we can't stress enough is, and we appreciate this both from a real perspective and from a legal perspective, is there's so many moving parts. I mean, there is the financial component of it, and certainly making sure you've got all your ducks in a row there. But then there's also, as Jordan mentioned, I mean, there is the legal side of it from multiple fronts. We have our corporate folks who are working with our employment law and HR folks who are, it's triage. And so not only are they dealing with the PPP process, but they're dealing with just real world issues on how to keep their small businesses, medium businesses, and even large businesses afloat and financially viable. And so it becomes a dynamic where you're dealing with multiple fronts. And so you've got to make sure your service professionals are coordinating with each other, they're talking with one another, and that they have the whole picture. Because whether it's the corporate restructuring that we've done for some clients to get them in the process where they are able to apply for the PPP loan, or dealing with them after they've gotten their PPP loan and working towards forgiveness, but making sure that they don't make strategy decisions, whether it's from a workforce reduction or salary issues, that they don't make strategy decisions that may impact the forgiveness or forgiveness ability, if you will, if that's such a word, of these loans. So I think from that perspective, trying to coordinate all of these professionals, whether it's your CPA, your financial advisor, your CFO, your attorney, your employment law attorney, your corporate attorney, trying to coordinate all that, because this is, a multifaceted process, and you want to make sure that you're not compromising your ability to get forgiveness of the loan during that whole process.
Excellent. So before I move to Elliot, I just want to summarize what I just heard, and that is, number one, the difference between goodness and greatness is execution. So whatever you're going to do it well, and use the advice of the people on your team. Since there's no playbook, there's nothing written. You need subject matter experts to kind of get you through this, and you'll get to where you need to go much quicker that way. Elliot, I wanted to push it over to you and see if you had any comments on any of this. Elliot's muted.
Let me see if I can unmute him. Hold on. Sorry about that, Elliot.
There we go. Yeah, I mean, I think that we need to take a breath here, a breather on this. My sense is that a lot of people who've obtained the loan now are in a rush. How do I do this forgiveness application? What do I need to do? Let me get it in. But in fact, there is no impending deadline. There actually is no deadline to submit the application. And so not only do we want to take our time to get the guidance from the SBA and the lender, because the application needs to be submitted to the lender. And we know that different banks had different modes of applying for the loan. So it stands to reason that different banks will have different ways of executing the forgiveness process. And we'll need to tailor what we do to each particular bank. I'm sure Bank of America is going to be much different than a community bank. And so, we need to allow this process to develop before we submit. I think the other thing is that it's probably fairly likely that there's going to be new legislation that's going to modify the forgiveness terms. Of course, it's hard to predict given political issues, but there's a lot of support in Congress for modifying the 75% rule. In addition, there's a interest in extending the 8-week period that the loan proceeds are used for in evaluating forgiveness. So again, those are only things that are being discussed, and nothing is certain until legislation is passed. But there's a decent chance that the rules that we're looking at in the forgiveness application now and in the guidance that has been released may get modified by the Congress and the president themselves.
Okay, thanks, Elliot. So, to Elliot's point, sometimes the slower you go, the faster you get there. So I think, that's a great point. There is no rush. But Elliot, I want to throw this back to you and just ask a clarifying question on that. And that is there some point at which you wait too long and you get an invoice from your bank with an interest charge on it if you don't reapply? Or you don't apply?
I believe that there's a 6-month deferral period. So I don't think under any circumstance that you're going to have a payment, an interest payment. The principal is not due under the terms for 2 years. So it would be a question of paying interest. And I believe that the statute provides that there's interest deferral for 6 months.
Okay.
So.
All right, that's great. So I want to move on into the actual process here. And, if you're looking at the process, it's essentially, you can call it AAA. There's a form, it's called Form 3508. You can probably search that, SBA, Form 3508. This is an application that has 3 parts. It has an attestation. There's the actual application where you put down all your documentation. And then there's a Schedule A, which is the calculation of your full-time equivalent. Your employees measured from 2 different time periods. Now, what I want to do is get into this with each panelist a little bit and talk about best practices. Somebody on the panel, somebody on the audience asked about documentation in terms of, support material as to what you use the money for, and also what was your state of mind when you took the loan. did you really need the money? Because that is an issue. So I'm going to start with Tom. Let's try to keep the comments concise and brief so we can keep moving through. Tom, why don't you go ahead and talk a little bit about this?
Hey, Doug, I'll talk about the one thing, and I'll let the other fellows talk about the other questions. Because you talked about, what's our state of mind when we took it, right? When we took this money, and that seemed to be a problem there for a bit. It seemed to be pulled back, but we still think it's important to have that, documentation that kind of you into getting this money. So in case you're ever asked a question, because as Elliot said just a tad earlier, things are changing constantly, right? And he expects more, and I can bet every panelist here expects more changes. So do any changes go back to some of the previous changes they made where they said, hey, if you took under 2 million, basically you're certified that you needed the money. I'm not so sure that's going to be the case, And so as Doug saw, we put together, it really was a 19-page assumption into getting this loan, why we took this loan. Most of that 19 pages has to do with state rules that were in place. But there's a couple pages of what your current situation is. I still think that's important to do. And Doug, you can feel free to put that out if you still have it. If not, we'll send it back off to you to put that out to the people in the chamber. I still think that's extremely important. So, that's all I'll comment on, because there's other people comment on the actual first question that you asked.
Okay, thank you. Jordan.
Oh, yeah, thank you, Doug. So just to kind of set the stage, you discussed, Doug, the fact that the application has these, these schedules that you talk about. Well, here is my, salary, and here is my FTEs, my employees during the 8-week covered period that after I got the loan, and here was my salaries and my workforce for this reference period. Now, the point of this reference period is so that the lender and the SBA can look at the application and say, okay, here is what this person's business owner's workforce was when they had the loan, and here is what the person's workforce was in the past when they did not, have it, when there was no crisis, and then when they didn't have any PPP funds. The purpose of this is to analyze basically, did you reduce your force? And so, documentation that you can, when supporting, what your past employment was, you can submit, a schedule in your past, employment register saying, here were my employees, here's how many hours they worked on average, because the SBA uses this FTE concept of, 40 hours a week is 1 FTE, anything less than that is 0.5 FTE. So you could have somebody that's right on the line who, if you were to have them on a 39-hour work week, that significantly, alters your eligibility for forgiveness, because you will have been deemed to have reduced your force. And so, if you can, support this, the details about here is what my workforce was in the past, here is what it was during the PPP process, and even for furloughed employees, you can submit documentation that shows, okay, even though they were furloughed and they were not working, here is what they would have done when they, if they were working. So the idea is that we kept them on the payroll. However, we kept them on the payroll, but they were furloughed. Here's what they would have done. This is all geared towards at least demonstrating that you didn't have any force reductions, you didn't have any salary reductions. So in the way of documentation, the interim final rule just basically says you can submit supporting documentation. So the supporting documentation that I would recommend is things that would at least show what your payroll was during the period, things that would show what your payroll was in the past. Making sure that if you did reduce anybody, and there's a concept that says, even if you did reduce people, you can actually redeem yourself. You can say, well, I offered them to come back, before June 30th. So any writing that could substantiate that, so that you could, those employees are not, cut against you, that would help as well. So there's some payroll documentation. There's all the written communications with your employees that would help substantiate, that you tried to keep them on, but maybe you couldn't. That's all stuff that, under the writing of the rule, seems to be able to be submitted with the application.
Right. All right. So I'm going to jump to Elliot. So Elliot, pretend you're talking to me, explaining it to a 4th grader. Okay. Say you have a do-it-yourselfer. They're going to go through this application, which, as you pointed out, is no easy feat. give it to us really simply, these definitions, FTE, reference periods. Just take us through what this really means to somebody, like what they have to validate with FTE. What does that mean? And the reference periods, what does that mean? Go ahead.
Well, so the context is that if you have a force reduction, then you may not get full forgiveness of your loan. It's one of the components that determines how much forgiveness you're eligible for. So the way you measure a force reduction is FTE, full-time equivalent. And the SBA came out with a rule that said that a full-time person is a 40-hour-a-week or more person. Anyone under 40 hours a week is less. And they have a shortcut method that they allow. You can either actually measure what they are. Say a person who's working 30 hours a week would be 0.75 FTE, 30 over 40. Or there's a shortcut where they say you're either a 1 FTE, or if you're part-time, less than 40 hours, you're a 0.5 FTE. The point is, though, that we use the FTE during the 8-week period, what we call the covered period, which generally is the 8 weeks after you receive the loan. We look at the number of FTEs you had during that period, versus a prior period, a reference period. And that prior period is either a time period, basically a year ago in 2019, or if you weren't in operation then, or if it's to your advantage, the reference period could be January and February of 2020. The whole point here is that we're trying to see if you've had a reduction in your workforce from that time before to the 8-week period now. If you do, and you don't qualify for a safe harbor that allows you to overlook this reduction rule, then you're going to lose some of the forgiveness.
Okay, thank you. So bottom line is that they're going to measure what you are paying in terms of your overall payroll and people at a certain reference point versus now. And that's what that is. And essentially, if your payroll reduced by 25%, you in theory would have to pay back 25% of the loan.
If your head count reduces, or if you didn't get into it, but if there's a salary reduction for certain employees, let me say this, going back just to the question of documentation and that type of thing. One thing that I think is some people for payroll costs who use a payroll service, say ADP or SurePay or those other big payroll companies, they probably have lots of data and reports they're going to be able to access. But I think what is important to business owners, there's a lot of business owners who have 2, 3, 4 employees who don't use an ADP. They're doing their payroll checks themselves. They may have their CPA file their quarterly reports for them. They may do quarterly reports on QuickBooks. Chances are, unless they have hourly paid employees, they're not really measuring. If they have salaried employees, they may not be measuring the number of hours they work. That's probably a concept that they're not used to dealing with. So they need to think now, how does this apply to me? Is my salaried employee a 40-hour person? Are they still a 40-hour person if they were before? Have I reduced them down to 30? That's an issue that they probably aren't used to thinking of and accumulating data on. It's something they need to be thinking about now and keeping probably much more precise records for their payroll as far as number of hours their employees are working now than they're accustomed to keeping.
Okay, excellent. So I'm going to let anybody answer Elliot, thank you. I'm going to let anybody answer this who wants to answer. There's several questions that are coming in with respect to people that have lost their jobs who may feel as though they're going to do better taking the state unemployment plus the federal unemployment of $6 a week. And as a business owner, I want to rehire that person, but that person says, you know what? I'd much rather watch daytime TV and collect money from the government and move on. Now, how does that affect me as a business owner? You know, I've taken the PPP and my employee doesn't want to come back to work. So, you know, let anybody jump in on that.
Sure. Go ahead, Samir. Sorry.
No, I'll just talk about the real, world application of that question, because we've been dealing with it, and I'll let Jordan talk about the impact on the PPP. But we've been dealing with from it just a guidance perspective with some of our clients. I can tell you whether it's bank clients who have shuttered their doors and are just doing, teller operations and remote operations to, clients with physical footprints in other businesses. They have been struggling with this, and there's going to be an issue when it comes to, and this is beyond the PPP, but there's going to be an issue when it comes to both for these employees and the talent pool and the unemployment rate, where they have been, some employees are making more money now on unemployment than they were, having a full-time position. And so several customers that clients that I've spoken to have encountered this very issue, where they've reached back out to some of their workforce, started to discuss with them the process of phase 1 or phase 2 reopening, and have gotten pushback from the workforce that they are going to continue to stay on unemployment. Now, I think it's going to create broader issues from an employability standpoint, from a talent pool standpoint, because it's very difficult to envision where these employees are going to go to get rehired by another employer during this crisis. But I'll let Jordan talk about the impact that has on the PPP program specifically.
Thank you, Simeon. So the rule, does create a framework for this scenario. And, just to, Elliot laid it out perfectly. The way that the framework is you look at your, employment during this reference period, and then you compare it to the employment during the covered period that you've had the PPP loan. And then any reductions in headcount or reductions in salary beyond 25%, the actual amount of the forgiveness will be reduced accordingly. Now, let's introduce this scenario. Okay, well, what if somebody says, well, I don't want to come back? Well, the rule says that, well, if that a reduction in force, because that's somebody who was there before who is no longer there, right? The person who decides not to come back will not count towards that reduction amount and they get this exemption if the employer gives that person a good faith written offer to rehire them at the same salary and in the same hours as the last period that person had. And that offer was rejected by the employee. Now, the rule also requires that during the 30-day period after the person rejected that offer from the employer will actually have to go forward and just notify the state unemployment office. So, I think that's meant to just make sure that people are just saying, well, I offered them the job and they rejected it. No, you have to take affirmative steps to let the unemployment office know. So just to kind of bring it to a close, it's intended that if somebody decides not to come back, and you've done everything you can to offer them basically the same package that they had before, well, that person will not count towards your reduction amount, and therefore any amount that you would have otherwise been entitled to get forgiven will still be forgiven. Excellent.
All right, I want to push forward. I'm getting a lot of questions about 1099s and that related type of thing there. So Tom, I want to push this to you because I know you've studied this a lot. A lot of our clients are 1099 types. So with respect to FTE, can a 1099 who has either entered the business, newly, or a 1099 in general, is that individual considered an FTE or portion of FTE if that 1099 took some of the work that a normal a person on the normal type of payroll used to do? So essentially, I had a full-time employee. The employee left, but maybe it's cheaper for me to get a 1099 online. I don't have to pay FICA and so forth, and I'm trying to game the system a little bit. I don't know if this, sir, I don't know if this was the spirit of your question, but I'm throwing it at Tom, just to address how that looks, when you're doing your calculation.
So I'll answer that, Doug, and then I want to go back to two things. I'll answer that one quickly. So look, in the very beginning of this loan process, it appeared, and everybody was very excited that it seemed like those that we had on with us that we had that we gave 1099s and not W-2s could be included in the loan amount, right? And of course, that was not the case. So therefore, or they are not part of your forgiveness. So if you have someone where you have them, and I'll call them a 1099 employee for lack of a better word, right? They're not on your payroll. They are not part of your forgiveness.
Okay, short, sweet.
And that was the question you received?
Yeah, pretty much, pretty much. Tom, I don't know if you guys ever watch like a Bill Belichick press conference, but that's what it's like when you talk to Tom. The answer is not. You're waiting for another question. You're waiting for another comment, and there is nothing.
Tom, just as a follow-up question, somebody asked if you can convert a 1099 employee to a W-2 employee. I presume that means an FTE. Can that conversion take place?
Absolutely. It's a new hire. You're not required to have the same employees, as your head count as you had before. It's head count. It's not exact head count. So, yep, that does work, right? And one thing I want to say about FTEs, and Elliot kind of, hit this just a touch, your FTEs can be calculated two ways. And I would suggest that if you have part-time employees, you actually do it two ways to see which is better, right? And so you can actually calculate it using hours, or the simplified method that Jordan brought up. Hey, if you're 40 hours, you got a 1 FTE. Anything under, it's a half FTE, right? And so where would that become important? Most likely when you have people that you're employed that have hours less than 20, right? I actually haven't gone through that calculation yet, just as a test. Probably will do that this week. But I would suggest anybody that has hourly employees, whether you do it or your professionals do it, you kind of want to do it both ways, right? Hey, and let me add one more thing, Doug, please. And Jordan did hit on this as well. But you had said, hey, if you go down 25%, you're going to get a reduction. Not the case. And Jordan kind of talked about that, where you're allowed a 25% reduction in salary before you have reduction in forgiveness. Okay? Very important, right?
So
there's really two reductions here. There's a salary reduction and there's an FTE reduction,
okay.
right? It won't get doubled. You won't have a double hit, right? There's ways that they have built in here, you don't get a double hit. I just want to make sure people know you don't have to have 100% wages. FT is a different story.
So, all right, I was referring to the FTE. Apparently, I didn't see that distinction. So that's a great point. So what I'd like to do now is there's questions coming in, and I wanted to spend a good portion of our time, doing Q&A and going through that, different odds and ends that people have. So, and I'll let anybody on the panel come back and any comments, of course, but I'm going to start here. Is there a minimum amount of hours an employee can work to be included in the PPP calculation? I don't know, Elliot.
No, I don't believe there is. Those people would have been counted as far as getting the loan amount. They would have been, assuming they were employed last year, the loan would have taken their salary into account. And in the current year, we would need to take them into account in the full-time equivalent comparison to the reference period. They're not going to be a full FTE, but the issue isn't so much whether they're a full FTE now. It's a question of what were they in the reference period? What were they when we look back versus what are they today? If they were part-time, say 25% time, 10 hours a week in a year ago or in the reference period, and they're 10 hours a week now, that's fine. No reduction in forgiveness, at least attributable to them, so long as they're still working relatively the same amount.
Okay. So there's a question from a sole proprietor, and that is, for sole props who have received PPP money, and this is once again the documentation question. What documentation will they need to show to have their loans forgiven? This obviously goes on that presumption that there is no official payroll. So, Tom, why don't you start, and we'll move over from Tom to Jordan and so forth.
Sure. Look, I've seen no guidance there about a Schedule C. Maybe there is, but I haven't seen it. you know, my assumption here would be that we're going to include your Schedule C from 2019, and I believe it to be almost an automatic forgiveness, right? To the level you got your loan. Because it's impossible today to know what your schedule is going to be in 2020, right? So I think it's automatic. I don't know if Jordan or his partner has any comment on that.
So I agree, Tom, not with respect to the covered period, because obviously, you know, the Schedule C wouldn't be done until the following year. But just maybe to help people along, well, what would they look at for the prior year? So you would submit your Schedule C, and you would submit your Schedule C, and the interim rule has this concept about, you know, owner comp replacement, which is basically line 31 on the Schedule C. So that's what they'll be looking at for the prior period. So that's, you know, if you filed the schedule, then it's easy to produce. But, you know, the guidance doesn't really talk about for a sole proprietor what they will be looking at for the current period.
You know,
Okay.
you had to include that Schedule C in most cases, right? I've seen applications that were approved that they didn't ask for a Schedule C. It was unbelievable. But I would say probably 95% of what I've seen, that Schedule C the bank already has, I would still attach it to the application for the forgiveness, you know, just so it gets through quicker than, you know, somebody going, oh, we got to now get a Schedule C. We're going to go back to your application. I'm not going to ask you anything.
So I'm going to wait for some more questions to come through, but I thought of a question, and that was, you know, for those optimists in the room, you know, there's a lot of talk about this being double tax free. You know, you get the money, you don't have to repay it, but then you can continue that, you know, that found money by deducting those payroll costs. So for the CPAs in the room, Elliot, why don't you start off? I mean, what does that look like now? I had heard a lot of different things. Last I heard was that they were looking at whether you could deduct the payroll cost. Where does that stand now, and where do you see it going?
The IRS, they came out with their opinion, which is that you cannot take a deduction for these costs that you pay with PPP money. And that's based on a long established tax rule that applies to other situations. But a lot of people believe, including some prominent congressmen, that wasn't the intent of the law. Again, one of those, this won't affect the forgiveness, but again, one of those pending legislation things that could happen is that the Congress could pass new legislation that clarifies that, in fact, you would get a deduction for these costs. So we'll just have to wait and see. If the Congress doesn't do that, by the way, I think the Treasury Secretary is on record saying that he agrees with the IRS, which makes sense because he's kind of their boss. But the Congress, if they pass the legislation, then that would be helpful. If they don't pass it, you might still want to discuss with your CPA if there's a position to take contrary to the IRS, but that becomes tricky and risky. So it's not something you'd want to do without, you know, discussing it with a CPA.
So Elliot, what I hear you saying is, depending on who your CPA is, sometimes it's good policy to beg for forgiveness rather than ask for permission. So I think,
Yeah.
yeah. So, all right, we got a good sense of how Elliot runs his practice.
Hey, mine is fully deductible, Doug. We're deducting. I'm kidding.
Right.
Listen, the
Elliot's
IRS,
exactly right. Right.
the IRS is entitled to their, IRS is entitled to their opinion, but that doesn't mean they're right.
Right. Big difference between tax avoidance and tax evasion. So we'll leave it there. We don't want to be giving that type of advice on an open line that's recorded. So, all right, I have a couple more questions here. You know, I'll just throw this out to the group. You know, for business owners, there was a cap on anybody of 100 grand in compensation. Is there any guidance on that being raised for the forgiveness period?
That answer is no.
Okay.
It's still capped at 100. And one of the things I was upset about from the Friday's guidance was for self-employed Schedule C people, they took away health insurance and retirement as part of your you know, forgiveness calculation, not allowed to include it, which absolutely makes zero sense to me, right? For those that are above 100,000, you would end up with the same result. If let's say you were an S corp and you had retirement and health insurance, that didn't get taken away from them. If they make more than 100, right? Which, let's all assume here, everybody's above 100, you would then get those two items part of your forgiveness. If you're a Schedule C, you're not. Let's talk about for those guys under 100. Well, they're the ones that need it, right? That change absolutely made zero sense to me, and I hope that's looked at and reversed.
Okay. So there's been a lot of talk about the fluidity of the Treasury and the SBA guidance. I got a question here that kind of goes to that, and that is, have any of you heard any discussion about whether or not there's going to be, I guess, if reduction in revenue will be examined, with the PPP process or the PPP period? And this came from the CPA, by the way.
In the context of whether you were entitled to the loan, you mean evaluating whether you could make the certification in good faith that you had uncertainty and you needed the loan?
I don't know. Maybe he'll send some context listening to this. I didn't have that. So let's move on. We'll come back to this if he sends something through. So now with respect to the application, somebody asked, is there an application form? It's form 3508 with the SBA, but the question I have, I guess with respect to this, is this just like the loan process? Will each lender have its own repayment, forgiveness document, or are we going to use a federal form?
The SBA form is, provides the standard form, but it also allows for a lender to use its own form. So I think the expectation is lenders can, if they want to, adopt a form that's different from the SBA form, but at least the elements that the form must have are the ones that will allow you to determine what was my payroll last year, what was my payroll this year, all the things that can at least allow them to say, here's what I used the money for, here's what I got the money for, and here's what I am entitled to in terms of forgiveness. And so the lender is going to have 60 days from the completed application to issue a decision to the SBA, and then the SBA's got to give back, actually remit the money within no later than 90 days after the lender gives its decision to the SBA. So it's, they've created some guidelines, I guess, around when the actual process is supposed to happen between. But the lenders are free to use their own form, but the form is available. The SBA form is available for somebody to look at and see what the actual requirements are.
Okay. I can't see the situation where you're going to be penalized by not starting to repay in lieu of a form from your lender. There's certain compliance that they all have to adhere to, as being part of the program. So to the person who asked the question about the form, my belief is, like the application process, the forms will be from your lender. They will follow the SBA guidance. And sometimes they have their own nuances in there depending on their compliance. But the underwriting criteria, both for the application process, as well as the FTEs and all the other repayment processes are probably the same because they're following federal guidance. All right. So in any event, there's a question about just verifying the 6-month time, the forbearance between, when you get the loan and start your repayment. It says, I'm not understanding a point. You say that there's a 6-month time that banks will not ask for repayment. Is that correct? Should we start paying until we hear? And I think the answer has been established. That's no, don't worry about it. Is that accurate? Tom?
Well, I think what is a better answer to that question than, should they do anything within the 6 months? They need to prep for forgiveness first, right? That's step one here. And then whether there's going to be repayment or not is all going to come from, the amount that they have proven, that they will be forgiven for, right? So I think the question is long before other things that need to be done. So they've got to prepare. They've got to apply for forgiveness. Their bank has to do whatever they're going to do. And I think, Simeon may have said this earlier, local banks versus national banks will be very different, right? And it will be very different. It's very different in the application and loan application process. It'll be different here. I think we got to go through that and get those answers back first. I don't think it's really a great valid question here, because we got to take this step first, you know. And Elliot did bring up, is there any reason to rush? The answer is no. I talked to a few banks yesterday, and they have no idea how this, they know they're going to be inundated, and they have no idea what they're going to do, right?
Okay.
None. And
So
so,
yeah, it's similar to the process with the application. There was this flood.
yeah,
They had to let this sort of drain off, so to speak, and then work through the process. So my advice to you would be, the only official source of information you're going to get clearly is going to be from your lender, because until they have forms for you and a process for you to pay it back, there's nothing else you can do. So I would reach out to your lender, whoever that may be, and that's going to be the start of your process. You know, don't troll around the internet Googling this. You know, speak with your CPA and go to your lender first. That's the best possible thing you can do for yourself. So I have a question with respect to reference periods. So, you know, just raise your hand if you want to jump in here. I'd like more guidance regarding selecting a reference period that is most favorable to PPP borrowers. What are the restrictions or benefits in choosing Q120 versus the 19 reference point? And, you know, Simeon, Jordan, who's got an opinion on that? Al?
Yeah, it's up to you. Whatever's more favorable for you in terms of the choice of the reference point. If you weren't in business, if you didn't have employees in 19, then you're forced to use the 20 reference period. But if otherwise, you're free to choose whichever reference period is best. So again, this is the reference period is that we're talking about here is for the FTE. Think of it as the denominator as part of that question. You're better off having a smaller denominator. So if your head count was lower in February and January of this year than it was in the 2019 reference period, you'll want to choose the January and February reference period, vice versa. I'd say something else related to the application and such. You know, my sense is if you just remember how crazy things were when the first wave of applications came in and the banks were overwhelmed and frankly, the application for the loan was, in my opinion, way simpler than the application for forgiveness. So I think that this round of forgiveness applications to the banks, the big banks, the small banks, whoever you're dealing with, is likely to be just as unwieldy. And I think that, again, I just don't think rushing into this, I understand people are antsy because they want to know what are they going to have to repay, what are they going to get for free. But bottom line is they really need to allow these lenders to take time to get their portal set up or their mechanism set up. The other thing just to go back to that 6 month is, just to clarify, if you qualify forgiveness, the interest on that accrued on that forgiven part, I believe, is also forgiven in the latest guidance. So there's no, it's hard to make payments now until you know what your forgiveness is. So it's really, we first have to get the forgiveness piece settled down and clear.
Okay.
Yeah, and I mean, from the bank's perspective, I mean, appreciate that this is overwhelming to them. They were in a process where, you know, for many of the banks, they were in shelter-in-place orders. Their employees many of them were working from home, and now have gotten hit with the deluge of these PPP applications that were busier than ever to take on, you know, enough people to keep up with the demand. And so they're now going to be hit with the second wave, which is the application forgiveness process, you know, the loan forgiveness process. And so it's going to take some time. You've got to have a good line of communication with your lender, or have your service professional have a good line of communication with your lender. And they're going to come up, to Elliot's point, with their own systems in place to try to navigate that process. But regular communication with them is a good thing. I agree with the notion of, you know, taking your time and make sure, you know, measure twice and cut once. And so I think all of that will behoove you as you go through this process.
Okay, excellent. Jordan, anything on this point?
Let me see. Jordan is muted for some reason. Let me unmute him.
I got it.
Okay, sorry about that. Yeah, so the only point to add is, I agree with that. You have this kind of choice as to whether it's the prior year or whether it's the beginning of the year. Seasonal employers also have another kind of period that they're able to use. The period between 2/5/19, or the average monthly payroll between February 5th, 19, or March 5th, 19, and June 30th, 19. And then obviously, if your operations have started after February 15th, then you can use an earlier period. So that's the only kind of other, kind of moving pieces if you're a seasonal employee. And then the SBA had released that interim rule on April 3rd, I think, with some of the additional guidance on who is a seasonal employee.
Okay. Okay, so thank you, Jordan. So I'm not seeing any more questions at this point. I want to, let me see. So the question from the revenue item came back in. So this is, I think I suspect I know the answer to this, but I'm gonna throw it out. He was referring to companies that did better, and in this new period than last time. Is the government going to penalize you for having greater amount of revenue? As far as I know, we still live in a capitalist society, and meritocracy is still good, but you never know. So is there any type of way that this is going to be a problem for a company that, did say 20% more revenue, in this period versus the reference period, or even prior to this shutdown?
Based on this question, Doug, I'm reading it.
Okay.
I would go back to the assumption form that I talked about a little bit earlier, right? What were the assumptions when you took this loan? And based on what the fellow's saying here, it seems like that they were just like the rest of us. Our businesses were going to go down. What they ended up, he says, is adapting to the market and doing better. So if his assumptions, in my world, if his assumptions on the day he actually applied and before he signed off on the loan were still the same, I think he's fine. Again, I'll go back, and maybe the attorneys can answer on this a little bit better than me. There's certification for over 2 million, and there's almost automatic certification for under 2 million. I don't know how strong that is, or how what their thoughts are. I would still do that assumption, use our assumption form and have it filled in and put it part of your file that, for forgiveness, right? Your whole file here. That's what I would suggest.
All right, so thank you, Tom. All right, so it's 9:30. We're bumping up on an hour. I want to just give a couple of words in terms of things you should hold on to. Number one is be methodical. Don't rush. Make sure you document your state of mind as well as payroll. I want to go around to each of the panelists. If there's one or two words or points, briefly that you can leave everyone with. Tom, what would that be?
Look, I guess we're talking best practices here, right? I mean, you got to stay in touch with your professionals and your bank. Absolutely stay in touch and use them. I see questions here that people are asking based on some of the things we talked about. Stay in touch, because I think what Doug said, do not stroll around the internet trying to figure this out. Stay in touch with us.
Thank you, Tom. Jordan.
I think most of it's been said. I think just keeping the broad 30,000 foot, kind of concept of, what did I get? How has my workforce changed, and how can I prove how my workforce has changed? And I just piggyback off of Tom. It's kind of just making sure that you're able to produce the documentation in the specific way that the application requires is going to be really important. So try not to get too lost in the weeds, but just remember what the application is intended to do. And the more that you can document and prove that, the better.
All right, great advice. Don't get lost in the forest. Try to keep a high level. Simeon.
Yeah, I can't echo Tom's comments enough. I mean, in terms of, the biggest challenge that we have with our clients is only being called when we're contacted, and we're trying to be proactive in reaching out to our clients. So staying in touch with your service professionals, I think, is critical. Letting them know the full picture, letting them know what's going on with both your revenue side, your employee side, the nature of your business, and to Jack's point, how it has augmented or morphed during this process, and communicating with them fully about that, I think, will only help you. It'll help you navigate through the process, view them as a guide, because uncharted territory for all of us, but having, true professionals by your side will be invaluable.
It's great advice. Don't go to see your doctor only when you're sick. Go for wellness. So don't wait till you get rejected or you have a problem. You're filling out things in the wrong color ink or something like that. See somebody first. Elliot.
Absolutely.
Yeah, I think that clearly everything that's been said, I agree with. This is not a do-it-yourself type process, in my opinion. I haven't gone through the form and the guidance so far. I'd have to say I find it remarkably complicated, and this is similar to what I do for a living. So I think that if you want to stay in touch, use the professional you have. If you don't have one, consider finding one who's well versed in this area to help you with the forgiveness. The other thing I would say is for companies that are doing a lot of their internal record keeping, doing it on their own, I think particularly smaller companies, when you're paying for an expense, whether it be payroll or other expense that is meant to be for the PPP funds and meant to support the forgiveness amount, the payroll and the rent, the utilities, the mortgage interest, get into the habit of saving the documentation, backing that up currently, and keep a record, whether it's in Excel or in your accounting records. Do it along the way, because doing it after the fact is just complicated and frustrating and inaccurate. So as you're spending this money now, try to keep the best record you can now to hand off to your professional.
Sounds great. Okay, everybody, it's 9:33. Everybody's got to get to work. The market's open. So I wish everybody good health. And if you have any questions, obviously reach out to one of us and we'll plug you into the right people. Okay, everyone, have a great day. Thank you.
Take care, everyone.
Doug, enjoyed it.